Hello, I'm Andy Prosser. I'm the Head of Investments at InvestEngine. Welcome back to our weekly Market Roundup, which is your quick look at what's been moving the markets and what it means for investors. So it started off as a quiet week for markets this week. They didn't move that much on Monday, even after Trump extended the tariff pause on Chinese goods for another 90 days. But then after that, we saw a nice strong rally take hold on Tuesday and on Wednesday, and that was thanks to some good inflation figures coming out of the US. So consumer prices in the US were in line with expectations. That was good. They were staying steady at 2.7%. And that boosted speculation that the Federal Reserve will cut rates in September. And that hope of rate cuts drove stocks higher. So all the major US equity indices climbed more than 1% on Tuesday. And the S&P 500 hit its 16th all-time high of the year. And the kind of general thinking behind this optimism is that because there are rising risks in the labour market, the Fed will probably tolerate temporarily higher inflation figures, provided that the kind of general trend remains downwards, to keep that labour market supported. But, and it is a big but, one downside of the expectation of lower interest rates is that it dragged the US dollar downwards. And that's because currency movements are partly driven by the expected differences between countries' interest rates. So that means that much of the gains that we've seen from the US market this week have actually been eroded for us sterling investors because of that weaker dollar. A second knock-on effect of that weaker dollar was that emerging markets have actually had a strong week. And that's because a lot of EM governments and companies, they borrow money in US dollars while they earn money in local currency. So that means that when the dollar falls, the cost of paying interest on that debt drops. So that's been a nice benefit for diversified global investors with emerging markets exposure. Rounding off the week then, the markets had a good finish, particularly European stocks, thanks to hopes that Friday's summit between the US and Russia could be an initial step towards a peace deal in Ukraine. So overall, despite the currency headwinds for sterling investors, it was still a nice positive week. If you have any thoughts or comments, please feel free to leave them below. Otherwise, for more updates, head to our blog, sign up to our newsletter, and we'll be back next Friday. Thank you for watching.